Then I'm gonna enable the dock. Let's try the dock here. Don't do that. Don't do that, bro. Don't do that. Don't do that, bro. Let me see if I can do all that stuff here. Okay, I can do that here. I'm gonna go yo. It's a little delay. What? There's a little delay there. Let me wait a couple of minutes. I got the timer down here. So I got 35 seconds in the books. Okay, so I got the timer down here. Let me see if this will work. Let's see if this will work. Let me move around the box. Hey, I'm in the middle now. I can cover myself up. All right. Hey, cover myself up right here. There you go, Tasso. There you go. Okay, now it's working. Do you hear my audio? You got my audio? Can you hear me? You can hear me? Audio is good? Audio. What, no audio? Yeah, I've been having technical difficulties, but right now, is my audio good? Right now, you're looking at this is all my links page. Okay, so good. That's what I wanted to know, my audio. Yeah, because what happened is I'm using OBS, of course. Let me change this tab. It's too bright. Let me put stock screener. Okay, let me leave it at that. Okay. Yeah, so I don't have to talk about money right now because you're here. Okay, we can talk about anything you want to talk about. I just want to get this stream going because for my retro gaming setup, I have a setup already for that. But for this one, I'm not using no video capture and all that. So I just need the browser here. And, yeah, I'm good. I'm good. Thank you. And I hope you're doing well. Yeah, so I'm trying this format for this channel. Because this is what I'm going to be doing here. I'm going to be talking about what's on the screen. You know. the stock, the stock market, stock price, cryptocurrency, and anything else people want to talk about. It'll be on another tab and so on. And then, of course, all in my link space. So I want to have it this format. So let me put it back on my stock screener. So I want to test it out, So I don't want this. Oh my God! Wow, I'm peeling my lips on the air. Yeah. I could tell. I could talk about it. Um, are you retired or are you working? I don't mean. I don't want to. I'm not trying to get personal. Because I want to know. Because you say you want to learn about stocks. What do you know about a stock? And I'll explain to you. Like, for example, my wife, right? She's pretty good at it now. Oh, you studied accounting? The heart is in the way. That heart is annoying the hell out of me. I'm actually in college. Oh, okay. Well, yeah, you're gonna learn about taxes and all that. That's part of the investing too, taxes and all that. Because you got to pay your taxes on even when you own stock and stocks go up and down in price. If you make a profit on a stock, depending, like for example, if you buy it, for example, hypothetical here, you buy a stock at $5 a share, but the stock goes up to $10 a share, right? And you sell at $10. So now you made a $5 a share profit. So on that profit, you got to pay a tax. It's called capital gains tax. Capital gains. So there's a tax for that. Off the top of my head, I cannot tell you what percentage that is, but there is a tax for that profit. Things like that. So that's why you need to know about taxes too. I do my own taxes. My wife does her own taxes. I took accounting class. I took accounting 101 when I was in college. I also took income taxation, but I've been reading about stocks since 1995, 1994. I go way back. And yeah, I was investing stocks back. Yeah, capital gains, exactly. So things like that. So anyway, a stock is like a share, a unit. I mean, I don't want to break it down to basics. So for example, what I mean is I digressed off I went off my tangents here. When you're working, you have companies offer a retirement plan, 401k. If it's a private company, you usually got a 401k, right? A 401k, you tell the company, take 1% out of my paycheck or 2% out of my paycheck, whatever, and it puts it into a 401k. So is your investment in the 401k is growing, is tax. I don't want to say tax free. It's tax deferred. You're not gonna pay taxes on that until you take it out when you're for the 401k. I believe is 70 when you're 70, and you start taking out your 401. Now inside that 401k, there's a lot of investment vehicles. The most conservative investment is a money market fund. That's just cash. You put your money. It's like in a bank account. You put your money, you put your cash in a money market account. And a money market right now, off the top of my head, I can't tell you. You're probably getting 3 or 4%. 3 or 4% it earns or something like that. I believe as high as 5% now. It's very conservative. Of course, it's backed by FDIC, Federal Deposit Insurance Corporation. Up to $250,000 is insured. So when you put your money in at a money market, especially with like a bank, is the first 250,000 is insured. That's the most conservative. That's money market. Of course, they have other conservative ones like certificate of deposit. That's another conservative investment. Okay, so that's the low end of the spectrum. That's conservative. Now you go all the way up to stocks. A stock is different. A stock is now you're investing in a company. For example, say Microsoft. You have I have $1,000 I want to put into Microsoft. I have $1,000 I want to put into Microsoft. Well, first of all, you're gonna have to open up if you want to buy directly in Microsoft, you can open up a brokerage account like Charles Schwab. Of course, it was TD Ameritrade. I just went to get my dinner. Okay. Anyway, you can watch the replay. Things like that. Way back then in the 90s, I had if I wanted to buy stocks directly from the company, I had to go to what they call dividend reinvestment plan. It's a whole. Of course, now in 2024, things are a lot easier now. A lot of people have Robinhood app. People buy stocks through the Robinhood app. So all you do is you download the app, you install it, you open an account with Robinhood, and you have it linked to your debit card or whatever, or you put money directly. I don't use Robinhood. I have it. I have an account, but I really don't use it. I just use it for the free stocks people give me. People sign up if they open up a Robinhood account. The link is all going to be in the description. If you open up a Robinhood account, I get free stock, and it's a random stock you get. But if you already you work for a company and you invested in a 401k or 403b or what is the other one, 450, I forgot what it is. Anyway, they're gonna invest in what they call mutual funds. And a mutual fund is a group of stocks. Is a group of stocks. Okay? So, that's very fundamental. What do I use? I have a whole bunch. I can't even begin to tell you. I can show you a sample portfolio of what my wife and I invested, but I'm not working now. She's working. She has a couple of 401ks from her old company that she invested over, I believe it's over 15 years. She put in that one. And that one has been, and then of course with the company she's at now, she's been there almost 10 years. That's another 401k she's investing now. And it also depends on your age. The older you get, as you get older, you need to, I'm going to keep saying it, people. I'm going to say it over and over. I know I have to say it because of disclosure. It's not my financial advice. I'm not a professional financial advisor. I am not that. This is just based on what I've done over my lifetime, our lifetime, my wife and I. For most people, no, I just use it to keep track of prices. You don't invest through Finviz. Finviz is just to keep track of stuff. When people ask me, for example, you want to know the ticker symbol, or you want to know the price of a stock, or a mutual fund, or in this case, even crypto, Finviz is a nice website to look at. But you don't need Finviz. Actually, most depending on where you sign up at, like for example, my wife has a Charles Schwab account. In there, you have all this information. This is just all information. This is for information, Finviz. But there's a lot of them. You could go to Yahoo Finance. You want to look up a company, you could do it there. Of course, CoinGecko is more for cryptocurrency. Where's my mouse? I'm gonna have to put a big mouse pointer. CoinGecko is for cryptocurrency. I would not get into cryptocurrency at all if you're not even familiar with stocks, because now cryptocurrency is very volatile. It's very, very volatile. So, I talk about cryptocurrency because I have people here that are into cryptocurrency and that thing, but that's something I would not talk about with someone that has, that's not even familiar with stocks. A lot of people that I know, come across that are investing in cryptocurrency are people already been investing in stocks for years. Because it's basically, like I said, when I mean volatile, I mean, it can even happen with stocks. And a lot of people get scared on that. And also see, that's the thing. The level of experience, it depends on how, like I said, I've been doing this for over 30 years. Yeah, and I wouldn't recommend crypto for anybody that's not even heavily invested in stocks, because that's another thing. As you invest, there's fundamental rules for all that. One of them is you don't put all your money in one thing, or in one investment, or in one stock, or in one. And I learned that many, many years ago. You don't do that. You don't put all your money in one thing. You diversify. What I mean by diversify, I know these are big. Some of these words are kind of big for some. Diversify means you put your money more than on different stuff. Like we have money on stocks, individual stock only. We have some money on index funds. We have some money on bonds. And then we have some money on a very little amount, very small percentage on crypto. So diversify is a very, very important thing that I stress. Diversification. Even within even in one particular asset class, like for example, Even if you're investing in stocks, I would not invest in the same type of stock or just one stock. I will diversify. Some of them are going to be, for example, I'll give you an example. I'll show you a sample portfolio. He's not up to date. He's not, I don't want you to think that I'm flexing. Let's go to portfolio. And this is what, we're managing. Let's go to portfolio number 2. Let's go to portfolio number. Let's start with portfolio number 1. So as you can see, and this is all. Some of this data needs to be updated and all that. For example, we own 113 shares of Walmart, right? 113 shares of Walmart. Of course, that's actually not up to date. We actually own more now. This has been updated in a few months. I need to update all this. Right now it's worth $19,300. Where is it at right now? Right here. $19,139.94. As of right now, that's what it's worth. Right now, just Walmart, just the 113 shares of Walmart. That's the value. Okay. Now, of course, you got to think a couple of things. Some stocks do pay dividends, like Walmart. Walmart pays dividends every quarter, every 3 months. Walmart, for every share that you own, Walmart will pay you. I forgot what's the dividend. I forgot the amount. It's like a couple of bucks, whatever it is. I don't know what it is off the top of my head. And the way we have it set up is that money goes back into Walmart to buy more fractional shares. So we call that dividend reinvestment. You take your dividend and you reinvest it back into that stock. That's what we do, because we're trying to grow. So if you invest on a dividend stock, that if you go through Stockpile app or Robinhood app, or you open up a Charles Schwab account or whatever, there's going to be an option where you can say, do you want me to reinvest my dividends? I check yes. I want all my dividends. I don't need them now. I don't want you to send me a small check every quarter. I don't need that. Take that money and reinvest it back into that stock. Okay? That's how you grow. Okay? So right now it says 113. We have, I think it's more than 150 shares of Walmart. Now, another thing that's going to happen with Walmart soon, the stock is going to split. So it's going to split in a 3-for-1 split. That means for every share of stock you have of Walmart, it's going to split into 3 shares of Walmart. So I forgot the date. I don't want to look it up right now. I need to have a separate thing here where I can look it up where it doesn't affect because there's so much information going on here. And I don't want to. It's going to be 300 and something shares of Walmart by the end of the month. I think it's actually next week when the stock split happens. Now, of course, right now, what is it? $169.38 a share. You got to divide that into 3. And that's a lot of math here. It's going to be about $50-something a share. It'll be over 360 shares, whatever. But again, you're still reinvesting in dividends. Main thing is, and I shouldn't talk about the stocks because just going ahead. But if you do buy dividend stocks, I always reinvest my dividends. And Walmart pays every 3 months. For every share you own of Walmart, you get I forgot what's the amount. There's a percentage that you get. So I'll get off the top of my head, I'm gonna say, whatever, $2. So yes, we had it is now Charles Schwab. Charles Schwab took over it. Originally we had Scottrade. Then Scottrade got bought out by TD Ameritrade. Now is Schwab. We had to update the app. It's Charles Schwab now. But that's what we use, Ameritrade, TD Ameritrade. But now it's Schwab. Schwab owns them now. And of course, another thing they have now is we have fractional shares. Back then, we didn't have all that. Back in the 90s, there was no fractional shares unless you went through a dividend. A lot of it has changed now. Investing is a lot easier now than it was 30 years ago in terms of like just downloading an app and you could do everything on your phone, you know. Okay, yes. Okay, I'm getting all this update. I thought something else happened. Sorry about that. So let's see. Right now it's 20 minutes in the books and one person watching. Thank you. So yeah, so Walmart's an example. I need to delete that Facebook one because it's no longer Facebook, it's Meta. So let me delete that one right here. I could just delete this one right here. Delete. Okay. Because now Facebook is Meta, the company now. Yeah, you can do everything through. Yeah, you can. You don't have to. You can do it. You can log in through. Like, well, I have a few things that I have to do through the phone only. Like I have an app called Stockpile. It's a very simple app. The reason why I used it because at that time I was using. I don't want to get into it here. When I was collecting unemployment, I was using to go into because anyway, Stockpile. Because basically, some like for example, TD Ameritrade or Schwab, you have to you have to send funds to it before you can buy the stock. And with Stockpile, I just put the credit card and I can just buy it right there. And then they charge you another fee. That's the only that's what I'm trying to get to it. I don't want to get to it because it's boring but I have Stockpile just for that. For sometimes I get a gift card. For example, sometimes I get a gift card, right? So I use Stockpile. No, I don't get a one because I know I've been doing this for years. I don't get a one. I've been doing this. In fact, my wife is the one that. No, no, I keep track. But that's me because I'm introverted and I've been doing this for over 30 years and I started back even before my wife even my wife was and I got my wife into it when we met. She knew nothing about it. I started reading. I first started like in 1990. What's in 19? Let me see. I went to Monroe. I started around 1994, 93. I started by reading books. Back then, you had to go to Barnes and Noble just buy the books. And yeah. On the radio. I forgot where it was. I used to listen to, in Bloomberg radio. That was my first, radio listening about stocks. A lot of it was Bloomberg. Back in 1990, I'm going to say 1994, 93, I can't remember. It was when I went back to college, when I first got my associate. Around that time, I was already starting to invest. Because I had bought a book. I think the first book I bought was How to Buy a Stock Without the Broker. That was one of my first books. How to Buy Stocks Without the Broker. I have it downstairs. I don't have a bookshelf here, but I show you. But anyway, so back then you had if you want to buy a stock without the broker, it was through Bloomberg that I learned about it. They used to play the commercial a lot in Bloomberg, and CNBC also used to play the commercial. Yeah, CNBC also. I used to watch CNBC a lot. So it's called Dividend Reinvestment Plan. So I called a number and they sent me a little pamphlet. But I went ahead and bought a book. I went to Barnes and Noble. I saw the book right there, How to Buy. And it lists all the companies that you can buy a stock. You can buy the stock directly through the company. So each company you had to get the form and you fill it out. You had to fill it out. Yes, it's good. Because back in the 90s, you had to create a brokerage account if you wanted to buy stocks. And back then there was a lot of commissions. It's not like today. Today everything is free commission. You could trade for free, like TD Ameritrade. Back then, there was a fee. There was a fee. So back then, you had to pay. There was like, I remember you buy a share, and it was like, I don't forget what it was. It was like $3. For every trade, it was like $4. So you can see the fees can add up. So if I wanted to buy 10 shares of Coca-Cola, yeah, I buy the 10 shares, but they also charge you a fee. Another like whatever, $10, whatever it was. So either way, it eats away at your money, at the money you're trying to invest in. So with dividend reinvestment plan back then is, and they still charge you a small percentage fee, but not much. Some of them did. So yeah, so I'll make a lot more videos. Since it's good that you're interested in it. So back then, I remember my first dividend reinvestment stock that I ever owned was Dial Soap. Dial, you ever heard of Dial? Dial Soap. That was one of the first companies. So there was a minimum. I think it was like a $10 minimum or something to get into the plan. And then back then, I didn't have no money. I only had I was only getting like $100 a week. $100 a week or 100 and something. I forgot I was getting in. It was a stipend and things like that I was getting. I wasn't getting any money, but I didn't want to just spend it because I was living with my mother. So I didn't need to spend it. So I would take that money and I want to say, you know what? I want to take this $100. I want to invest it. So I would take that $100 and I would just write a check and send it to Dial Soap. And it would buy shares of Dial Soap. And, that was the first company I ever bought a stock. It was Dial Soap. Of course, I don't know who owns Dial Soap now. I think Procter & Gamble owns them. I forgot who owns them now. Anyway, back then it was a separate company, Dial Soap. And I bought that stock, and I wound up owning eventually it was like 10 shares of Dial Soap. It could have been as high as 20 shares. And then what happened with Dial Soap back then, they split the company into two separate companies. So I kept the remaining shares of Dial Soap. And a new company, I got a couple of shares of that new company. And I think the company was called Viad Corporation or something like that. It was a hospitality management hotel. And I know my memory's still sharp after 35 years or whatever it was. When I remember that was one of my first stocks. And then, of course, I bought other stocks. So back then you had to do it without a brokerage. We didn't have Robinhood. We didn't have TD Ameritrade. We didn't have all that online stuff. This is at the beginning of the internet. If you wanted a brokerage account online, it was very expensive. You needed $1,000 to even open an account. I didn't have that money. I didn't have that. I was broke. I was eating ramen soup and all that stuff. And my mother, she had no money. And I was living with my mother. Yeah. So, I came a long way. But I learned a lot of it myself. I read a lot of books. I also read another book called Personal Finance for Dummies. Stock Investing for Dummies. The For Dummies books, people look at it and they think, oh, you're a dummy. No. I like the For Dummies book. I have a whole bunch of them. I have a whole library full of For Dummies books. They're the yellow books with the black and the white lettering. It says For Dummies. Those are great books. If you just want to learn something, the very basic of it, in a very simple language, I recommend For Dummies books. So, I have a whole bunch of those books. I have Personal Finance for Dummies. It explains to you about, for example, what is secured debt, what is unsecured debt, what is a stock, what's a bond, what's a mutual fund, what's a capital gain, like I mentioned earlier. I love those books. Those are great books. I tell people all the time. And of course, they got Cryptocurrency for Dummies. They got everything. I learned C++ when I was in school. I'm learning coding. I bought books, C++ for Dummies, Java for Dummies. When I took my A plus certification from computer technician. A plus certification for dummies. That's the book that I studied to get my A plus certification. So yeah, I'm A plus certified. Over 20. Of course, they updated the test now because now we have a lot of network and all that, a lot of phone apps, a lot of mobile phone network now stuff. I got mine for back in 2000, 25 years ago. Yeah, they also have ham radio for dummies. They do have that. They do have all that. Ham radio for dummies and things like that. Let me switch over to the YouTube thing. Because my mouse, where's the mouse? I gotta tap it because I'm using a wireless mouse. Let me go here for a minute. I want to see. Yeah, this is weird that my YouTube studio is not showing anything, but that is weird that I go back to YouTube studio and it's not showing this. So right now I don't even know how many people are watching. It doesn't tell me on OBS. I know it's probably one person watching because I don't know how many. This is weird that YouTube Studio is not updating. Wow, this is weird. Yeah, but it's I recommend it for any even some. Oh my God, what the hell? Okay, I'm gonna keep it here for a second and see if I think if I close the dock. Oh, maybe that's what it is. Maybe because I'm chatting with you in the dock. Anyway, oh my God, what is going on with this thing, man? Yeah, I need to tweak this because right now, if I go to my YouTube studio, it's not showing there. It's still showing like I'm connecting. It's weird. That is weird. Okay, 2 people watching. Wow. Okay. Because I'm exclusively on OBS only, but yeah, I recommend that. I recommend for dummies books. People get those are very good books. They're very basic, and it'll get your feet like. I remember when I was working at before Kawasaki, I had to learn electronics. I got electronics for dummies. Electronics for dummies. And that's how you learn. I had to learn because I had to learn read schematics and all that. I had to take a test for rail car technician job, and I knew very barely anything about electronics. And I went through that book. I kind of breezed through it, and I took the test and I did very well. And I got the job. And those are great books. So I have books like that. I have and that's why I always say like when I was growing up, my friends out there, and I knew people that had a lot of money. I know people that had but of course what they were doing. I knew people that they were up to no good. You know what I mean? They were they were driving their flashy cars and all that. What happened to the stream now? It's gone? Buffering? No, what happened is it's weird that let me see if I close the dock here. Cause anyway, forget it. If it's working, I'm gonna let it go. I leave it the way it is. But I'm gonna make some basic videos on it. I think I'm gonna do a series of videos on what is a stock, how if you want to invest in stocks. Oh, no buffering. Okay. Because it depends on the like when I talk to people about this stuff, they go like whoosh, like you know. But this accumulation of years of learning. I lost money too. I lost quite a bit of money too. And some of it was fundamental stuff. I remember I had one time I don't want to get specifics, but it goes back to that whole thing. Don't put all your eggs in one basket. That's a fundamental rule. You know how you see this. These are just some of the stocks that we have, and it's diversified within industry. You know, like for example, you have Walmart, which is retail. We all know Walmart. We all shop at Walmart. That's another thing that I learned. Invest in stuff that you know. What I mean by that is Warren Buffett. You know, that's Warren Buffett philosophy. He buys stuff that he uses every day. And you know, Warren Buffett is a multi-billionaire. He's the owner of Berkshire Hathaway. He owns a whole bunch of companies. But and that makes sense. If you're gonna put your money in something, know what it does. For example, we have shares in Walmart, right? We know what Walmart is. We shop at Walmart. I shop at Walmart. My wife and I, we shop at Walmart all the time. So we're shareholders of Walmart. We know what it does. We say, oh, Walmart's a great store, right? For example, Procter and Gamble. Procter and Gamble. Do you know what Procter and Gamble is? They make a whole lot. They make a lot of stuff. Procter and Gamble makes a lot of stuff. They're most famous for toothpaste. You see what I'm saying? You invest in stuff like that. Invest in stuff that you know. Don't invest in something that you have no idea what it does. That's what I tell people. Invest in stuff that you know. Okay? Remember that. So Procter and Gamble. Berkshire Hathaway, of course, is run by Warren Buffett. Procter and Gamble is you're not familiar with Procter and Gamble? Yeah. Let me see. Let me click on. I don't want to click on it and go away from it and all that. Anyway, you can look it up. You can look it up on your end. Procter and Gamble, a lot of household products, consumers, household products. They're all over the place. I believe they own, if I remember, Pampers and all that. Anyway, they have a lot of. It's a whole bunch of products they have. So Procter and Gamble, right? Makes sense, you know. You use these products a lot. Yeah. Schlumberger, that's oil, gas company, oil and gas. That's drilling and stuff like that. So you see, in my case, I'm very, I'm all over the place. I have retail, I have oil and gas, energy stocks. Kraft Heinz, you know what that is. You know what Kraft Heinz is, right? Ketchup and all that other stuff. You know, they started with ketchup, Heinz company. Now it's Kraft. Kraft and Heinz merged a few years ago. So Kraft Heinz is all those stuff that you, condiments and all that stuff that you eat, and mayonnaise and ketchup and mustard and all that, whatever. So of course, Kraft Heinz. So that's another company, you look into. And this company like Kraft Heinz, companies like that. The reason why I like companies like that, because it doesn't matter what economy. Even the price of oil. Well, it does. The price of the bottle of ketchup. But in terms of like, we all have ketchup. We all use ketchup, right? We all use. What's the best ketchup? Heinz ketchup, right? It's probably one of the better ketchup. I'm not a big fan of Hunt's ketchup. I like Heinz ketchup. That's my ketchup, a Heinz. So you see, makes sense to own the stock. Of course, there's a lot of Kraft stuff I eat too. So own a stock like that. Have Heinz stock. Apple. Of course, I don't own any Apple products right now. I'm an Android guy, but Apple, Apple Incorporated. Apple, you know what Apple is? iPhone and Mac and all that. Chevron, of course, is gas. Gas, Chevron gas and all that. Some companies you're not going to be familiar with because that's more, and now I did research on it. And for example, this one, Gladstone Capital Corporation, that is a company that invests in other companies. That's what that is. And the reason why I bought that, we bought that stock because that one pays monthly dividends. So instead of quarterly, that one pays monthly. So every month we get dividend from Gladstone, and we reinvest it to buy more Gladstone stock. So that's what that is. No, we don't have Microsoft because that's because I'm waiting for the stock to split, or if it drops a certain price. Right now, Microsoft stock is very pricey for us. We had it back then and we sold it. It was a big mistake. We should have never sold it. And like I say, you're not gonna be able to own every share you want to. Some of them are very priced, very high. Costs. And that's a whole nother for another topic. But we do have Microsoft in, not as an individual stock. We do have Microsoft in other funds. Like her 401k, she does have Microsoft in there. Mutual funds, index fund. I have an S&P 500 index fund. Microsoft is in there. So even if you don't own the Microsoft stock directly, it's most likely it's going to be on a 99%. It's going to be on one of those S&P 500 index fund or blue chip fund or something like that. Microsoft will be in there. So even if you don't own it, so we didn't, even though we don't have it individually, we didn't buy Microsoft stock directly. We have Microsoft stock all over the place on other funds. Of course, here we have Goodyear Tire Rubber Company. You know what a Goodyear is? They make, of course, tires. Okay, so I'm just running down stuff here that people can, Ford Motor Company. Of course, that's Ford. Ford cars and all that. Ford Focus. So we're invested in Ford. Okay, so we do have investments in Ford. And a lot of it, of course, also, like I said, is in other funds, index funds and all that. And Occidental Petroleum, it says, the name is petroleum, so you know what I deal with, oil. And Texas Instruments, a chip maker and so on. I don't want to go through the rest of it, but I'll skim through it if you want to ask me any. I'll just go through them real quick. American Airlines, ExxonMobil, General Electric. We do have here, and we need to update that share price because what happened with General Electric. They did a reverse split, so that needs to be updated. So I'll update that in the next couple of days. I'll update it, and there's other stocks that you have here and so on, and And then the next portfolio is going to be the second one, which is, okay, let's close this ad. We don't want the ad. So, of course, this one, we have Meta. Right, Meta. What is Meta? Meta is, they own Facebook. So, there you go. 100 shares of Meta is worth, what is this price right now? $4.69. It skyrocketed. Wow, it went up. Woo, wow. $4.69. So right now it's at the 100 shares of Meta is at $46,959.00. Okay, that's what we have with Meta. We bought Meta back when it first came out. It was an IPO. You can see the price right there. When we bought it, it was at $38. Over, when is 10 years ago now? Over 10 years. Oh no, 12 years. 12 years ago, 12 years ago we bought Meta for $38 a share, or $3,800 total. So now that $3,800 initial investment is now worth almost $47,000 right now. So that's another thing. You got to think of it, this is long-term stuff here. Okay? So, no, yeah, we bought on the first day, IPO. And the first day it came out public, we bought it. Bought 100 shares. My wife and I said, well, we're going to put and this is during when it was Scottrade. We're going to put, we have $4,000. And he said, we're going to get 100 shares of Meta. Whatever the price is of Meta, we're going to try to get 100. You're going to get 100. Bam. So you got 100. And we held it all these years. 12 years later, it's a nice little chunk there. And you can't panic sell. That's another thing. Meta's been going up and down. Now, when we bought Meta back in, I'm trying to remember what year now. I want to look it up. I have to look it up right now. I know when it was IPO. We're talking about over 12 years ago, right? 12 years ago. It went down to $20 for the first year or two. Meta was like all over the place. It was flat, and we were like, "Damn, did we actually made a mistake?" We held it. We said, "No, Meta's gonna go up." Back then, I'm going to say Meta. Of course, it was Facebook. Facebook is gonna go up. Relax. It's gonna hit $50 a share. It's gonna hit. I'll talk about that in a minute. It's gonna hit $50 a share one day, and it hit $50 a share. We was excited. Yeah. It's gonna hit $100 a share one day. It hit 100. It's gonna hit 200. It took years. If you believe in the company, to this day, 2024, Meta is still one of the biggest social media. And love it or hate it. Of course, Meta does not pay dividends. Okay, so they don't pay dividends. So, all right. So that's an example of buying something and holding it, and it's already over 12 years. I forgot. When on the next live stream or whatever it is, I'll the exact date when, because it was on the IPO. It was on the morning of that IPO. We bought Facebook. So that's a good example right there of, you can see the total gain right now, 1,100%. 1,100%. Okay. So that's that's Now, of course, if the Meta ever splits, that would be even better. That would be nice if it splits and then it goes up. But right now, and mind you, Meta, what? 469. It went over 400. 400. And a year ago, it was floundering at 300. It went down to 280 something, 270 something, and we were like, oh boy, but you know what? But you can't. This is a good example of not panic selling, and that's another thing I recommend people do. No, I recommend people do this. When you're investing in long term, do not watch the news every day. I made a video on that a couple of years ago. When you invest, do not watch. I learned that about CNBC and all that later on. I don't watch them anymore because they try to sell you doing doom and gloom or the fake news. If it's not bad news is what keep eyeballs on the screen, right? You know what? Right now, of course, we got so-called 3 wars going on or whatever. People tend to panic and sell. No. We're in it for long term. We're in it for, my wife is younger than me. She's not going to retire in another 20 years, maybe. Me, in a couple of more years or so, I'll be collecting Social Security. But don't watch the news. Don't let the news dictate your investment, strategy. If you believe in the company, you believe in the product, you're fear mongering. If you believe in the product that you're investing in, just stick to it. Okay? Don't. Because it happened to me. That video that I talked about that, it was not my last video, probably my next to last video, or it could have been my last video. I talked about all that. I panic sold about 3 major events in my life. I panic sold, and I regret all of them. Have I not panic sold on any of them? Right now, I could say I would have been a millionaire. Probably many times over. I could have been a millionaire. I could say it. I could say it. If I didn't panic sell at those 3 particular events, I would have been a millionaire. But that's why you learn from them. And it took me about 3 times to learn. And finally, when the pandemic hit, Remember, the market was tanking. The pandemic hit. The Dow, the Nasdaq, everything was tanking. It was like really. Okay, let me not move my hand so much. I'm getting a little warning. I don't know why I'm getting a warning. Not like I'm gaming. Yeah. We could have panicked so back then and we didn't. My wife looked at me and she said, "Don't even think about she's a lot tougher than I am." She said, "Don't even think about selling now." I said, "No, honey. Right now, the stock prices are very cheap. We're buying now. Now we're buying. So a lot of these stocks, some of them, we bought them when they were dirt cheap. At the lowest part of the pandemic, it was around what it was, April of 2020, when I remember the Dow was down to like 19,000. It went below 20,000, I remember. It was and a lot of stocks some of the stocks were in single digit numbers. They were very cheap. So that's why we wound up buying like 50 shares, 100 shares of this stock. They were really cheap. Because we only had so much cash. So we bought whatever we can. We bought whatever you can. Like what's an example of a stock here that we bought? What's an example? I'll show you. What's an example? I have to go back to the other portfolio, the first one. Of course, these are not. For example, let me see. I'm gonna give you a good example. What's a good example here? Schlumberger. Here we go. Schlumberger. That stock at the height of the pandemic. It was $16. Actually, it was cheaper than that. At one time, it was I think it was about $14, and we didn't buy because we buy another. So we bought it at $16.79. Right? I'm gonna put the pointer right at it so you can see. Schlumberger, right there, right? That was during the pandemic. Schlumberger, we bought Schlumberger at $16.79. This was around April 2020, or it could have been March of 2020. I think it was April 2020. It was really bad. That was that was all doom and gloom. Oh my God, people are dying all over the place. So he pulled the trigger. We bought 100. No, it was more. Yeah. I think it was probably about close to 100 shares of Schlumberger. $1,600. $1,600, right? $1,600. And now it's worth $4,778, right? Almost $5,000. You want to round it off, 5,000. So that's a good example of a stock that we bought it really cheap. $16. And now the stock is worth $47.45. It has been higher than that. I think, well, let me see. Did it almost hit 50? So, because right now, of course, gas and oil is high, right? So some is oil is a drilling. They deal with drilling and all that. So, and hello, Triple P Radio 2009. So that's an example of a stock that we bought it very, very cheap. Very, very cheap at the worst part of the pandemic. And now it's doing well. So think about that. So when you hear bad news all over, the sky is falling and all this stuff, and you look at the stock market and all the stocks are plummeting, that is a buying opportunity. Yeah, but you do your research on the company. If you know about the company, you know that they're going to bounce back. The overall economy is going to bounce back. You can get them when they're cheap. Now, of course, we're talking about all this stuff now with the... Hey, hello, Bobby. I hope you're doing well. And this is what I'm talking about. When that happened, everybody was selling. Remember, everybody was panic selling. Oh, my God, the sky's going to fall. And everybody's selling their stock. And the price is plummeting. We bought it at the cheap. Bargain price. Okay? So that's a good example of that one. Another stock I can look at I think we got it very cheap was Ford. That's another stock that was very cheap. 100 shares of Ford. During the pandemic, at the worst, like I said, on the same time, it was $5.90 a share. I know Ford has been down. I remember when Ford was down to $3 a share, very cheap because like, oh my God, nobody's gonna be driving and traveling all over the place because of the pandemic. Oh my God, we all gotta stay at home now, and now Ford is worth double, right? $12.80 right now is worth right now. And that price can go up because of the EV and all this stuff that's going on. So the initial investment of Ford was about $590. Right now, we pretty much almost 3x. So right now it's worth $1,280. It pays a small dividend, like nothing. Like I think it's a penny. I think it started paying again. It's a penny a share. So a penny 100 shares at a penny. $1 a share, $1 dividend, a penny a share, I think, or something like that. And so $1 every quarter you get for Ford. So $4 a year, it buys basically a fractional share. What I'm saying is, buy it cheap. You can buy more when it's cheap, and hold on to it. That's a good example of the pandemic panic. I got Hertz on another one. That Hertz was down to nothing. Under $3, and now Hertz went. They even filed for bankruptcy, reorganization, and all that. And I still held on to the stock, even because I couldn't sell it anyway. I couldn't sell it. Simple. So that's why I tell people when you invest in stocks and all that, especially in stocks, don't watch the news because you're gonna panic and you're gonna sell. You're going to sell. The worst thing you can do. Because it happened to me 3 times in my lifetime. And I regret every single one of them. Because it bounced back. One of them was after 9/11. After 9/11, I sold off a lot of what we had. And then in 2008, I believe, then the housing crisis happened. And I'm kicking myself in the foot for those. And my wife reminds me every other time. She said, oh, we used to have Microsoft, but guess who sold it? She lets me have it. And she's right. So panic selling is the worst thing you can do. Panic selling. Because once you sell it, you cannot recover your potential gains in the future. Once you sell it, that's it. You lost it. So another example of a stock that's... Let me see. Let me go with the highest percentage. Yeah, General. No, not General, because that one, that's a reverse split. That one isn't. Oh, U.S. Steel. That's a good one. U.S. Steel. U.S. Steel is another one. We bought 25 cents of U.S. The pandemic again. U.S. Steel, of course, you know what they do? They make steel. Their steel been around for 100 years or 25 shares of U.S. Steel. It was at $5.94. Right now it's worth $46.07. So when we bought U.S. Steel, we only bought $148 worth. We only bought $148 of U.S. Steel. Now it's worth $1,153. So $150 investment. A few years later, almost $1,200. That's a small amount, $150 on 25 shares of U.S. Steel during the pandemic because it was so cheap. And I remember U.S. Steel was even less than that, but it was already going up. We started buying it. Okay, so that's an example. Another one here is Delta Airlines. I want to show you a better example, but. Yeah, Delta Airlines, another one. Remember during the pandemic, oh my God, nobody's going to travel. The airline stocks were all dropping like flies, right? And I said, honey, let's buy 10 shares of Delta. We bought some Southwest and some other airlines. We bought American Airlines. So we said, let's get 10 shares of Delta. 10 shares of Delta, right? Where's Delta? Excuse me, Delta. My bad, right here, Delta. Delta. Yeah, Delta. About 10 shares of Delta is 19. When we bought it, it was $19. We believe in Delta. We said, Delta's going to survive this pandemic thing. I know there's no flying right now, restricted flying. I know a lot of people were flying with empty planes, like empty seats. And right now, Delta is worth $40.21. So $193 worth of Delta now is worth $400. So we basically doubled that one. Okay? Simple, very small investment. You know, $19.35 a share. 10 shares of Delta. Now, it doubled. So stuff like that, you can do. Okay? Don't think you have to have a lot of, you have to, that's another myth, not a myth, but people say you gotta have people ask you all the time, do you have to have a lot of money to invest? No, you can invest with nothing. You can invest with $10. Open up a Robinhood account, download Robinhood, minimum investment. You can put $10 in Robinhood and buy one share. Oh, I want to buy. You could buy fractional share. So for example, let me give you an example. Let me go to the screener. I'm gonna put the most expensive stocks. Let me just put the most expensive stock. Well, not Berkshire. This one is private. You're not gonna be able to buy that one on Robinhood. But say you want to buy Chipotle, right? Chipotle, right here. Chipotle. Let me close this ad. Chipotle's right here. I don't own Chipotle yet, but I'm gonna get. I'm gonna get it soon. I get it soon. Right now, Chipotle is worth right here, CMG, right? Ticker symbol CMG. So right now, Chipotle is worth $2,666.99 a share. I don't have $2,600 and I don't have $2,700 to buy one share of Chipotle. If I wanted to right now in cash. I mean, we can buy it, of course, but I'm saying you don't have to buy. You don't have to own a whole share of Chipotle. You put $100 on Robinhood, and you own a fraction of that Chipotle. You could just say, you know what? I want to buy $100 worth of Chipotle. So you're gonna get a fractional share. It'll be like the 0.00 whatever fraction of Chipotle. You're gonna own a fraction of a Chipotle stock, and depending whatever the price is, it's gonna reflect on that fractional price. So you don't have to have a whole share of Chipotle, because one share of Chipotle is, like I said, it's $2,700. So so that's one stock that we don't have because it's very expensive stock. Of course, Tesla was expensive. There was a time where Tesla was expensive, but we waited till but we didn't wait it. Eventually, it split. The stock split, and it was cheaper. That's when we got into Tesla. Sometimes some of these stocks, they're gonna split, and when they split, that's a buying opportunity for that too. So for example, if Chipotle ever splits like 3-for-1 or 2-for-1 or even 4-for-1, like what happened to Apple, what it was, over a year ago or so, 2 years ago, it was a 7-for-1 split, and that's when we bought some Apple or Alphabet. Alphabet is Google. Okay, that's the name of the company, Alphabet. That's the parent company of Google. So Alphabet, for example, I remember Alphabet was a $2,000 stock, but then they did a split. That's when we bought some Google stock or Alphabet. So keep that in mind if you want to buy stock like that, like a very or any stock, even Microsoft, for example, Microsoft, right? You can't afford what's Microsoft right now? Let me scroll down. I have to go to the next. Let me see Microsoft. Ticker. Let me see Microsoft. What's Microsoft? What is Microsoft? I forgot what it was. Can't remember off the top of my head what it was. No, I have to look it up. Anyway, let me go back. Let me sort it out again. Anyway, Microsoft. I don't have. We have it on different mutual funds, but anybody tell me to take. I don't want to look it up right here while I'm doing all this. Take a symbol of Microsoft. I'll type it in there. But I believe it was over $500 right now, whatever it is. So, for example, if you don't have $500 to buy a share of Microsoft, you can say, you know what? I have $50. I'll buy a fractional share of Microsoft. So through Robinhood and apps like that, you can do that. And also, like I said, right now, Charles Schwab, you can do that. You can buy fractional shares. For a while, a lot of these big brokerage things didn't have fractional shares. But now, even the big brokerage accounts now, they understand the power of buying fractional shares. So now you can even do that. But if you don't want, if you're new and you're a beginner and you want to get into buying stocks, I would recommend Robinhood. Robinhood is I have a link in my description, and it's also on my channel. I have a Robinhood link there. So if you sign up through that Robinhood link, not only I get a free share, you get a free share. Just opening the account and just depositing. I forgot. I think it's $100 or the minimum. I forgot what. So you have that too, Robinhood. I also have Stockpile. That's another one. I can show you Stockpile. You see Stockpile. This is one of the accounts. Oh, click on that. So this is Stockpile. Okay, I have to log in. Oh, sorry about that. Oh God, what was going on now? Gremlin. Let me try that again. Gremlin. Next. Okay, here. All right. So this is Stockpile. This is how it looks like. Stockpile. All right. So Stockpile, you can do that too. You can put whatever amount. You can put $10, $20, $100, whatever you want to put in there, and you can buy fractional shares. Like I have some that I only have like $20. I have some that I only have $20 on Hewlett Packard or whatever it is, and it went up to like right now it's $117. I started I think with $20 or $50. I forgot what it was. The other one I had like $75 and it's up to $135. I can show you. I think the focus is not that. You see? 10 shares. 4 shares of Hewlett Packard. So this is just Stockpile. So you don't have to have a lot of money to invest. You don't have to have, thousands of dollars. You can start with under $100 or $50. And out of the, just open an account. Just open an account and then you put like $50 in, and you buy. You don't have to buy the most expensive stock. Just buy, Snapchat or whatever. I wouldn't buy. We have Snapchat, but it's down for a while. It's been down. I'm just saying, like any company that you're familiar with. All these companies. I will get a dividend stock. Like I show you, Heinz, Walmart. Companies like that. I would because those have dividends. And when you're doing Stockpile or in Robinhood, you make sure you reinvest the dividend and let it reinvest the dividend. So anytime it pays off dividend, it's gonna buy more of that stock. Okay. So, it's something you look into. I don't know what's going on with my. Yep. And Chicopee Radio says $3 for a car. Well, I wish CAR. I don't know. And yeah. So right now I've been on for 1 hour and 1 hour and 9 minutes in the books. So so that's that. And of course, like I said, cryptocurrency, that's another thing. But I wouldn't get into cryptocurrency right now because I have cryptocurrency. I have quite a few cryptocurrency. But cryptocurrency is another. That I'll get to another time because right now I've been now we're talking about stocks. But if anybody's watching out there and want to ask me about crypto, they can. Again, also you can use Robinhood. You can use Robinhood to buy crypto. If you want to buy Bitcoin, you can go through Robinhood. You can buy some Bitcoin on Robinhood. Of course, my videos, most of them are more advanced. Some of them, like for example, if you open up a Coinbase account, you could buy crypto there. That's for crypto only, Coinbase. I do have Gemini account, but however, I am going to be closing my Gemini account in the future because I'm just not a big fan of Gemini anymore, especially with the Earn program, with the whole deal with that. I do have the I mean, I shouldn't say that because I still have Gemini. It's just the Earn program, and I'll get into that in another video because with any investment, especially crypto, do your own research. The Earn program for example, in crypto, we was getting a certain interest rate on some coins, but unfortunately, what happened with Gemini, they were lending that money out to other companies or funds, whatever, and I don't want to get into that here because but I still have Gemini account. But if they ever do bring back the Earn program, I will not be investing in the Earn program. I just what's good about Gemini or Coinbase, you can buy crypto there, but I will put it eventually in a wallet, a hardware wallet or software wallet. I wouldn't keep it in there anymore. I would not recommend that because a lot of these exchanges, although Coinbase is probably the best out of all the exchanges in terms of like not the fees, but in terms of, and I don't want to say that because they're the most regulated here in the United States. So that's why I buy most of my, now I buy all of it there. If I'm going to buy crypto to exchange, I go through Coinbase first now. And then I move it to my wallet and then I do. But that's beyond the scope of this live stream for now. So I'm going to go back over here. Yeah. So let me go back to the home. So I know Tasso asked me what is the difference between, let me go back up here. Let me go back over here, I'm sorry. I'm trying to go to the live stream. Tasso, can you talk a little bit about the difference between the Dow Jones and the Nasdaq? Yeah, that's just an index. So, for example, the Dow is right here, right? The Dow represents the Dow Jones Industrial Average, or we call it the Dow, is the top, according to the Dow Jones, they have a company called Dow Jones. They that's an index. That's an indicator of how so the Dow has the top 30 companies listed in the Dow. So they have companies like IBM, I believe. I don't think IBM is in there anymore. I have to check what the top. Anyway, it's an index of 30 stocks. Stocks like Apple, Microsoft, the creme de la creme of the stocks, and they put them in that index, and that's like the indicator of the overall market. So when you see the Dow going up, that means that the overall the stock market is doing well. In other words, okay. So it's an indicator of that. So it's just so it's like an average of the top 30 stocks that they have listed. Okay, that's what that is. So it's an index. Okay. And the Nasdaq is another index, but that one is more broader. That one is more, I forgot. Yeah. So the Nasdaq is another index, but it's more broader. That one has you're going to have a lot of the Dow stocks in there. Actually, not even. The Nasdaq is has more technology stocks, maybe some smaller companies, maybe under $1 billion market cap. So that is another index. So when they say, "Oh, the Nasdaq is down, but the Dow is up," the Dow is gonna be like the huge companies. You know what? Let me look it up. I don't. Thing is, I'm on a live stream and I don't want to open up another window. Look it up. I mean, you can look it up. You can just put what is what is the Dow and what are the companies listed in the Dow? Because that changes every so often. Because sometimes a company falls under a threshold. Usually the Dow is companies that are worth over, I think, 100 billion or something like that. There's a number. I think if the company is worth over 100 billion or something, plus there's a couple of other factors in it, they make it on that list. There's only 30 stocks that make it on that list. But they always update it every so often, like every few months or whatever they update. Or it can stay like that for a year. Sometimes a company goes into trouble and it goes below the threshold of that listing. So anyway, what I'm saying is basically those are the creme de la creme, top-notch companies. So you're probably gonna see somebody. You're gonna see like Apple in there. Microsoft will probably be in that top 30 in there. Okay, you're not gonna see like what's a small company right now? Not a small company. What's a company? I'm trying to get. You're not gonna see like company like Taiwan Semiconductor. You're not gonna see that in there because they're not a $100 billion company or 200-300 billion company. That's what I'm trying to say. So the Dow is the top 30. So that's more broader. The Russell 2000. That's gonna be a lot broader. So the Nasdaq, I think, is 250 companies, but a lot of them are gonna be tech related. It's a different index because remember each of them is a company. Dow Jones Industrial. Dow is run by a company called Dow Jones. So people use the Dow Jones as an indicator. Nasdaq is owned by the Nasdaq. This particular one, I think, is 100 top companies in the Nasdaq, and also the Dow is New York Stock Exchange. New York Stock Exchange. Nasdaq has their own exchange. It's called the Nasdaq. It's electronic. The Dow is New York Stock Exchange. That's Wall Street. You live in New York City. You know what I'm talking about. So New York Stock. That's something. The Dow. All those stocks are traded in the New York Stock Exchange. They also call it the big board because they've been around for 150 years, whatever it is now. I don't know what it is off the top of my head. Yeah, that's a very broader indicator. That's 2,000 stocks. So that's a broader indicator of that. Okay? So the Russell 2000, is a very broad, is 2,000 stocks that are listed there. So all these stocks are going to be listed in the Russell 2000 plus more stocks. So you're going to see like companies like Schlumberger, Kraft, Heinz, they're all going to be there. American Airlines might be in the Russell 2000. They're not big companies, but they're at least big enough. There's a market cap where they have to make it to that market cap. So if you want to think about the Dow is like the top 30. The Nasdaq is like the top 100. The S&P is like the top 500. And then the Russell is like the top 2,000. If you want to think about it like that. Okay, it's broader. The Russell is very broad. You're going to have a lot of, very small companies inside the Russell 2000. You're going to have like, I'll give you an example. You're going to have a company like Plug Power. They make hydrogen cell. You're going to have companies like that. You're going to have a company like, very small companies like, what's a very small company I can think? See, I'm blacking out the top of my head. You're going to have companies like that. You're going to have very, Datadog, Cloudflare. You're going to have companies called Cloudflare. They deal with, internet traffic and all that. Cybersecurity or whatever. Cloudflare. You're not gonna see a Cloudflare on the Dow. You might not even see it on the Nasdaq. You might see it on the Russell 2000. Okay. Sirius XM. Sirius XM, you're not gonna see it on any of them. And maybe the Russell 2000, you might get. It might not even make the Russell 2000. Sirius XM. Okay, satellite radio, Sirius XM. Things like Audacity. If you're familiar with radio, Audacity, right? That's a publicly traded company. Although I think they filed for bankruptcy recently, so I don't even think they would not even make it in the Russell 2000. So that gives you an indicator of. So these are all indices. So it's just a barometer of the overall market. Okay. So that's what, when you see the Dow, the Nasdaq, it's just an indicator. So, I can click on one. So let me see the S&P 500. It's just the chart. Okay, so you can. But yeah, so think about it like that. Top 30, top 100, Nasdaq. Now again, in this case, I believe the Dow, they all have to be traded in the New York Stock Exchange. I believe they all trade in the New York Stock Exchange. The Nasdaq, or the S&P, or the Russell 2000, because remember, the New York Stock Exchange has their own threshold. They have their own threshold. So the company, to get a seat on the New York Stock Exchange, your company got to be worth this much. You got to have X amount of time at this number. They're it's a club. It's like a club. If you don't make the New York Stock Exchange, then you go to the Nasdaq. Those are all the other stocks go to the Nasdaq. Now, some companies might not qualify for any of them. Those are called like penny stocks. Those are called the pink sheets, OTC. Those are like, penny stock. People buy penny stocks to invest. Basically it's like you're speculating. I had a couple of penny stocks, and some of them did well, and I sold it. I bought like 1,000 shares of this penny stock, and I swing traded. I waited. I was holding it for a couple of days, and it went up to a certain price, and I sold it. And I made I made some decent money, and then it plummeted or whatever. And one of them, I bought a penny stock, and it's reverse split, and I got burnt. I put like 1,000 shares of this penny stock. It was like $100 worth of the penny stock. And sometimes you get lucky, sometimes you don't, but that's different. That's really speculating there. So I'll go to the screen, I'll show you. So these are all the prices, right? So penny stock, let's see. So for example, you got this company right here. The cheapest stock here listed right now is this one, Alkaline Water. Alkaline Water. Okay, this ad is in the way. I'll give you an example of a penny stock. Alkaline Water Incorporated. Consumer defense, that's a sector. These are the sector. Industry, beverage, non-alcoholic. So that's what? Water, right? Alkaline water. I don't know if you ever heard of alkaline water. I'm not familiar with it. But anyway, that's a good example of a penny stock. Right now, how much is that stock worth? 2 cents. 2 cents a share. Right? Alkaline water, 2 cents a share. Market cap is what? 0.27 million. So that's why 270,000. So right now the company's worth 270,000. That's it. So that company, $270,000. That's it. That's all they have. Okay, so 2 cents a share. Of course, with with Stockpile, you're not going to be able to buy that stock because there's a limit. I think Stockpile, if the stock goes below $3, they're not for sale on Stockpile. I don't know, Robinhood, you can buy penny stock. I don't think so. The only place you can buy penny stock is a brokerage account, like TD or Charles Schwab. Because I bought penny stocks before. I bought penny stocks. And I bought like 1,000 shares of at 2 cents. I forgot what it was like $200. 2 cents. I forgot I had to do the math. I don't have the calculator. I could do it right here in my hand. calculator right here. So let's say I want to buy 1,000 shares of alkaline water. This is not financial advice, people. Please don't do this. I'm just showing you what you can do with swing trading, or So wow, let's say 1,000 shares times what is it? 0.02. Okay. Oh no, that's okay. $20. So $20 you buy 1,000 shares of the alkaline water. Am I doing my math right? Is it 20? Okay, math for me is going over my head right now. Let me do that again. Okay, I want to buy 1,000 shares times y. So it's 0.02. Yeah. So that's $20. So $20 will get you 1,000 shares of the alkaline water, whatever. Now, the thing about penny stock, you got now is a lot of leveraging, right? If that price goes up another like a couple of if it goes up to 4 cents, you just doubled your money. You see what I'm saying? All of a sudden, your $20 is worth $40. So if that thing goes to go up to imagine it goes up to 20 cents. So what happened? So now you just went from what? $20 to what? $200. It could be, in a day, whatever. So, I wouldn't recommend this for, a newbie getting into this. But this is the example of, because I done it. Not at 2 cents. I mean, I bought stocks that were I believe I bought one that was 20 cents. And I threw about $200 on it, and it went up to 47 cents. It went up to almost $1. And then boom, I got out. That's it. I mean, a couple of hundred, whatever it is, So, these are the cheapest ones. Of course, these are not going to be listed, not even in the NASDAQ, not even in the Russell 2000, they're not going to be listed. Okay? None of these. So that's an example that, when we talk about index, they're not going to be listed in any of these. None. Because, you saw that the market cap on that one is only 270,000. That's not even going to make it to the Russell 2000. That's the broadest one of the major ones, the Russell 2000. So that one is going to be, you'll have to find it in one of these searches. And that's a penny stock. Those are not going to be listed anyway. Those are going to be, So I hope that answers your question, Tasso, about the index. So, you're not going to see a penny stock on the Russell 2000. You'll see, whatever that they're listing. So you'll see companies, you'll see the all those major companies there, but you also see what they call mid cap, also small cap companies will be in there. Not Moderna. What's the there's another. Remember when they were making a vaccine for all the companies? You have Pfizer, which we have Pfizer. We do have Pfizer stock. We have Pfizer. We don't have Moderna. I don't have Moderna. We don't own any Moderna. Johnson & Johnson. We don't have any Johnson & Johnson. That's another one. And then there's a couple of other ones that are the ones around the world, like in England and all that. AstraZeneca. There's a whole bunch of different ones. There's a bunch of them. So there you go. So 1 hour and 29 minutes in the books. And 6:47 p.m. here in the East Coast. So I need to update this thing because I want to know how many people are watching. Right now I cannot see how many people are watching. I cannot see that at all. That is weird. Yeah, that is weird that I'm not getting that here. My YouTube studio right now is not showing me the screen. I could show you that. Only Yeah. 3 people watching. Okay, so it's probably gonna be you guys, the other two lurking. It's okay though. I'll take it. Yeah, so I'm gonna be doing this regularly. I'm glad that you're very interested in this. And like I said, I always say it on my other live stream. My live stream only works with you guys here, with people that keep asking me questions. Because otherwise, I'll be talking to myself, and I want to know what I don't come. I don't come in here with a script. This is the time to ask me questions, and and I'll try to answer as best as I can. But I'm glad that you understand that now. So yeah, so those are in this index, and that's another thing. Also, when you invest, right, Tasso? When you invest, you don't have to buy one stock only. You could just buy. They have for example, S&P 500 index fund, right? So they have like what they call ETF. I'll give you an example. ETF. Let me give you an example on that. So that's what I recommend too. If you're not comfortable with buying individual stocks, you could just buy the ETF of that index. So they have, like, for example, a Dow Index ETF. They have NASDAQ ETF. ETF means exchange traded fund. So they have a fund, for example. The most common one is the S&P 500 ETF, right? So I'm gonna go to where can I go to show you? Let me go to the screener. Let me go to. Let me see. Let me look it up here. See, I wish I could open up something more simpler. Anyway, I'm gonna try something. I'm gonna try Yahoo, and of course we got the whatever finance. Since it's only you asking me this right now. Okay, so for example, ETF. Let me just put ETF. So you have all these different ETF, right? There's very big ones. Like, for example, this is a big one. SPY, right? Let's go on that one. I'll show you. So if you go to Robinhood or Stockpile, why suddenly I look frozen here? Okay, because the problem with Yahoo, it plays a lot of videos and it kind of messes up the stream, and unfortunately, So anyway, you could buy the ETF. So for example, this is traded as a stock. So right now that ETF, one share of that ETF is worth $498, right? So Tasso, if you're not comfortable with buying one particular company, the best way to go about it is just get an ETF. So you open up your whatever account and you say, I want to buy. I have $1,000. I want to buy, $1,000 worth of S&P 500 Spider. That's a company that makes it. Spider S&P 500 ETF. What that stock does, it mimics the S&P 500. So the S&P 500 is doing well. That stock is going to be doing well because it uses a computer. The computer does it. It mimics the S&P 500. So that's what an ETF does. It mimics a particular industry. In this case, it's the S&P 500 index. Okay? So you don't have to buy. That's what we have. We have an ETF. We have a couple of ETF for my son. They're in a custodial account though. So right now he's only 9 years old. So we put money in it for him. And I have two of them, and then one of them I have an ETF. I have one of those. I have S&P 500, and I have a blue chip fund for him. The blue chip is like the Dow. It's the creme de la creme companies, and it's traded as a stock, and it mimics the Dow Jones. The other one is a S&P index from, I think, for the Vanguard S&P 500 index fund. It's the same thing as this one. It mimics the S&P 500. And I'll show you the top. The holdings are right here. See? So when you hear the news, oh, the S&P 500 is doing well. That stock, the S&P 500 stock that the ETF is doing the same thing. It's mimicking the S&P 500 index. Okay? So just think about it like that. It's a stock that has all and I'll show you what the S&P 500 holdings are. So let's go down here. Let's see if they have the companies. So right here, these are the top 10 holdings. Oh, these are the top 10 and the let me move up because my head is in the way. Okay. So the ETF or the S&P 500, these companies are in there right now. Apple, Microsoft, Amazon, Nvidia, Alphabet Class A and Class C. That's Google. Okay, Alphabet is Google. So that's Google. Meta is Facebook. Tesla, Berkshire Hathaway Class B, and JP Morgan Chase. So those are the 10 out of the 500. Those are the top 10 of the S&P 500 in that ETF. So even if you don't buy Apple, Microsoft is in there. Okay? Is in there. So that's another thing. So even if you don't want to buy each so right now this ETF owns 7%, not 7%. It's 7% of his assets is so Apple. It has 7% of Apple in that ETF. So and that fluctuates in that, but you don't need to know all that. The main thing is this mimicking this is mimicking the S&P. So the S&P, all these companies are in the S&P, and 490 more, because the S&P 500, remember, is top 500 companies in the world. They don't have to be in the United States. They could be, global. They could be Mercedes-Benz. It could be foreign companies too. It doesn't have to be U.S. companies only. Okay, so keep that in mind too. So right now you see all these American companies, but it's actually more than that. Very big companies all around the world, international companies. Now you'll see like a Honda. Honda will be in there most likely. Airbus, Airbus, they make planes. That's a French company, Airbus, right? They make the A3. What is it? I forgot what they are. They're Boeing's competitor. A lot of big airlines use Airbus planes. As a French company, it's a big company. That's going to be in the S&P 500 too. So you got to think about that too. All those companies in there. Okay. A lot of companies are. Canadian companies, big Canadian companies, they're going to be companies from India. You might see one in there. Chinese companies. It's got companies like people not familiar with Alibaba. Alibaba is in there, probably, most likely. I don't know if it's in here in the S&P. It might be in there. Alibaba owns what? AliExpress. They make a lot of stuff. Alibaba owns a lot of stuff. Tencent, that's another company in China. It's a big, there's a lot of social networking in China. Weibo, is it Weibo? Tencent has there's a big company in China, Tencent. Another big company in China. Okay. China Airlines. Things like that. Of course, if you go to Japan, you have, Toyota. Okay. Kawasaki Heavy Industry. Okay, you have a lot of, Honda, of course. There's a lot of stuff, There's a lot of companies all over the world. Germany has, of course, you have your, what was it? Anyway, so the S&P 500 is not only American. Keep that in mind. There's going to be some, a percentage of it is going to be international companies. Okay? So, I know I'm throwing a lot of stuff at you right now. But it's good. It's good that you're interested in this stuff. So anyway, so that's what I would do, and I'm not financial advice, like I keep saying it. This is not financial advice, folks, but this is the way to go if you don't want to buy individual stocks and you don't want to. It kind of take away the guesswork from all that. You know what? I always recommend everybody. Even like for example, when people ask me all the time, I started this company and they offer me a 401k plan. What should I invest in? I say the first thing I always would do is S&P 500 index fund. Put some money on the S&P 500. Because that is the broadest indicator. That's not very broad, but it's the one that people use the most, the S&P 500 index. Because the Dow is it's only 30 companies in the Dow. A good measure is the S&P 500. That is the best indicator of the overall stock market in pretty much, the top 500 companies in the world. S&P 500. So when people ask me all the time, it's that answer. That's the first answer that comes out of my mouth. Is invest in an S&P 500 company, and set it and forget it, and put whatever amount you want to put in there every month or every paycheck, whatever, and don't look at it. No, don't get affected by the news. Don't look at it. Don't panic sell, and you'll do all right. And historical. Since last 100 years or whatever, if you put anything in the S&P 500 and you kept it, you made a good return. You made a better return than pretty much than any other asset class. Even gold. I know people talk about gold. S&P 500, you're always gonna. And again, not financial advice, folks, but it's proven over history. That's why you young bucks out there, you're gonna put money. You're gonna put some money for your long term. S&P 500, ETF or in S&P 500 mutual fund in a 401k or whatever, or Robinhood. You go in there, you see index, you see the S&P, like the spider. This is one of the spider. The ticker symbol is SPY. Is right there. That's the ticker symbol. SPY. So, for example, I have my stockpile. Let me close all that. Let me open up stockpile again. So, say I'm in stockpile. I want to buy that one, right? I want to buy that one in stockpile. Although I don't have no cash in stockpile right now, but I'll show you what I mean. So, let's say I'm in stockpile. Let me log in again because it kicked me off. And right now, I want to go. I don't want to show my. So right now, I don't know if you can see it. I'm gonna try to. It's kind of hard to see. But if I want to buy it, I'm gonna go to the here, and then I'm gonna put SPY, and then I put that in the search, and then this came up, right? Let me show you. I'm trying to show you. I put down the search SPY or SPY. Yeah, I'm not. I don't like Dave Ramsey. I'm gonna tell you why in another video. He's old. His information is old. I don't agree with some of his philosophy. But he does talk about ETF and all, and that's fine. I'm talking about the whole getting out of debt. I don't like his philosophy. I used to listen to him, but then he's not in the real world right now. He doesn't make sense. And debt free, that's one thing, but sometimes you cannot. Unfortunately, I'm going to tell you, this is my philosophy. All right, but let me show you anyway. And I'll show you the search. See the search? Oh God, come on, bro. So the search came out with all these S&P 500 index ETFs, see? So there's a whole bunch of them, okay? So, no, Dave Ramsey is a whole nother issue with the getting out of debt thing. Like, he thinks that you can basically, like, a lot of people got to pay rent. A lot of people, right now with this inflation the way it is, You know, like when he says shit, when he says, I was gonna say, I mean, like that whole thing about there's a certain point where okay, not everybody can sacrifice half of their income and throw it into paying off debt. I'm sorry, I'm not doing that. There's stuff I have debt. I have debt. My philosophy is: am I gonna kill myself to pay off debt? No, because the way this country's headed, you got people out. You got this president right now. He wants to pay off student loans for a particular part. So why am I gonna kill myself paying off my student loan when he's about to? You know what I'm saying? You got one thing you're gonna invest in, but you also gotta live day to day. Day to day, you gotta live day to day. His philosophy is you sacrifice. No, you gotta live too. You gotta live. You gotta live. His method is too drastic. It's too drastic. I'm sorry. I agree with some of it, but some of his method is too drastic. There's people out here that have over $100,000 in student loan or more. I'm sorry, and some of it is I can get into a whole hour with Dave Ramsey, and I don't agree with his philosophy because I'm proof of it. I have some debt, and some of it I'm going to tell you I'm not going to pay it off because it's certain debt that you know what, I don't care if you want to report me my income because at the end of the day, you want to have cash. But you also want to have something for the future. And his method is, you know what? You should invest in anything until you pay off your debt. No, that's ridiculous. You could do both. Unfortunately, some of it, the interest rate is going to go so high. Like, for example, I had credit cards that I owed. I had credit cards that I owed $4,000. And it got to a point where I said, you know what? I'm not going to pay it. I don't care. I'm not paying it. I'm not going to pay it. And you know what I did? It just sat there for 5 years or 6 years. One day they sent me a settlement. Okay, well, if you give us $1,000, we'll wipe it out. And at that time, I was doing well. I was working. I said, you know what? Now I can pay the $1,000 and you'll wipe it off. They'll write it off, and that's what I did. I'm not gonna sit there. I'm not gonna sit there, kill myself, pay off this much debt when I don't have enough money to eat. No, I'm not doing that. I'm not doing that. Yeah, but that gets tricky with the car because you need a new car too. You have to pay car payments. That's why I don't want to talk about it because it gets sticky. It gets really sticky about that. It's very individual, and he likes to do the broad brush thing on it, and I hate that. I hate that. I caught on to that later on. And of course, he hates crypto. He poo-poos crypto, and I don't agree with him on that. I think crypto is I think crypto, you can invest in crypto too. He's ignorant when it comes to crypto. He's ignorant in that. Because he doesn't know anything about crypto. And that's why I don't agree with him. There's some things that when I heard him about, oh, you should invest in ETF, or yeah, that's fine. Anybody can tell you that. I'm telling you that now. And I'm not a professional or worldwide, global, no, should I say global? Nationally syndicated radio show. I'm telling you the same thing he could tell you about that. Okay? About the investing in mutual fund and, or if you're working, 401k, those stuff, But he starts going crazy with the, exactly. A lot of it is income. Right now, the minimum wage in New York City, you can't make even, you can't pay rent even if you're making $20 an hour. Even if you're making $20 an hour, you barely pay rent in New York City. If you live in bumfuck Idaho, I'm sorry, I'm gonna say it. PJ Ready out the window. If you live in bumfuck Idaho, I don't know if that's a real town. I'm just being funny right now. You can live on $20 an hour. But if you're in New York City, $20 an hour is not gonna cut it. He's not gonna cut it. You're gonna struggle. You're gonna struggle. You're gonna struggle. For a 1-bedroom apartment, $20 an hour in the Bronx, you're gonna struggle. You're gonna struggle. I guarantee you, you're gonna struggle. So he doesn't know that. That's a problem. He's a baby boomer. I'm not a baby boomer. He's a little older than me. He's older than me. You know, when he says that this generation, they don't understand. No, you don't understand. That does back in the days, if you had a job and you could save up $10,000, that was good enough down payment for a house. You can't buy a house with a $10,000 down payment. Not now. Not even in Westchester County. You know what I'm saying? It's a lot harder to buy a house now than it was when he bought his house. So I hate when they say that. I hate when they do that analogy. Well, I toughen up to my bootstraps and I save up $10,000, bought my first house. You can't do that now. You can't. You can say $10,000 is nothing to save up. You can save up $10,000. You're not gonna get a house with $10,000 down payment. Not in New York. Not in New York. I'm sorry. Maybe all the way up there in Ogdensburg, Canadian border, where they have a big meth problem up there, or in Troy, New York, or in Niagara Falls, New York, where it's like a ghetto. You might get lucky with a $10,000 down payment on a house, on a beat up house. So he doesn't understand that. He doesn't understand that. He's in his, he doesn't understand that. And a lot of these old baby boomers don't understand that. It's not like that now. It's not like that. So I hate when they blame the generation after me that they're lazy. No, they're not lazy. They're not lazy. It's just harder. It's hard. That's why they have to stay with their parents now. They have to stay with their parents now. It's harder. Rent is high. I'm sorry this went to this guy, the PG rating went out the window about bumfuck Idaho. I'm sorry, but I'm going to say it like it is too here. It's the truth. And people don't understand that. And then when he poo-poos crypto, he lost me on that. Well, he really lost me a long time ago. But when he poo-poo crypto, that's it. Jamie Dimon did the same thing. The head of, what is it? JP Morgan Chase. CEO JP Morgan Chase. He used to poo-poo crypto. Oh, crypto is... Now, what do you think JP Morgan Chase is investing in now? They have crypto. They have crypto in their portfolio. They have Bitcoin. I mean, the creme de la creme of crypto. The same thing with crypto. You're going to invest in crypto, right? I'll give you an example. Let's go to crypto. You're going to invest in crypto. Would I tell a person that never invested in crypto to buy, Froggy coin, meme coin? No. Because you're going to lose your money. You're going to get burned. I would tell them, go with the proven one. Bitcoin. That's it. I would say, you want to look for, you want to get into crypto? You want to buy your first crypto? Buy Bitcoin. That's it. Fractional coin. Because you can't own one Bitcoin. One Bitcoin is $44,000. One Bitcoin costs $44,168 as of right now. Right? But you can buy fractional. Any crypto, you can buy fractional. When you open up a Coinbase account, when I open up my Coinbase account, I put $100 in. The first $100, what I did, I bought $100 worth of Bitcoin. You better believe that's the first. Cause I don't know nothing about the other ones. All I know about Bitcoin. I said, yeah, I know about Bitcoin because the Bitcoin is popping up everywhere. That's what I did. I said, I want my first $100. ever in crypto, I bought Bitcoin. That's what I did. And he doesn't know that because he's ignorant. He's ignorant when it comes to that. That's why I can't. I guess when people talk about Dave Ramsey, I go, he's like 1990 something. He's a relic. He's a relic. That's not the way things are now. It's a lot different now. If you work 20 years at a company, nobody works 20 years at the same company. You're lucky if you get 10 years before they lay you off, or the company gets gobbled up by another company. That whole thing about work 30 years at a company and you get the gold watch. No, that's a lie. That doesn't happen anymore. These baby boomers, when they come out with this nonsense, they're talking out of their, the other side of, the other orifice. Not the mouth, the other one. That's what they're talking out of. They make no sense. Because I've proven that. My wife has proven that. We've proven that. That's a lie. And that's why I don't like I hate his philosophy about, you got to sacrifice. You got to have to, that whole thing about, so 5 years of my life, I'm going to starve. I'm going to starve myself 5 years of my life just to pay off a debt. No, I'm sorry. You know what? The hell with them. They have enough money, they can write it off. So that's an example. Credit card, $4,000 credit card. You know what? I'm not going to pay. That's it. You know what? If you're not going to work with me, then the hell with you. That's it. You're going to ruin my credit. Woo! I'm sorry. You're going to ruin my credit. Ugh. Get out of here. So I let it sit there. And then about 5 years, it took about 5 years, 6 years. Then they start sending me stuff. Oh, we're willing to settle. Same thing with Verizon. I talked about Verizon in my other channel. I talked about Verizon. Verizon is another one notorious for that. I canceled my DSL, whatever it was. Yeah, sir, you owe $174. Well, you know what? I'm going to keep owing $174. I ain't paying it because you're wrong. But I let it sit there. You want to ruin your credit? You know what? Good luck on that, bro. And let it sit there. And what happened? 3 or 4 years later, we're willing to settle for $50. And I said, try again. Then they sent me another notice. It took about a few months after that. We'll settle for slightly below $50, but you can break it into 10 payments. I said, yeah, I'll give you $5 a month for 10 months, and you can wipe off my so-called 179 plus interest, because it ballooned. It was not 179. Then they started hitting me with interest. It went up to like $400 or some crazy amount like that. And I kept saying it. Yeah, you keep on, bro. Keep on. Let it sit there, because I ain't paying for it. Because they can't. They cannot take you to collection. They send you the stupid thing about. I learned about that collection stuff too. That's a racket. It's a racket. You're gonna ruin your credit. Get out of here. This is nonsense. Yeah, I'm gonna keep investing. I'm gonna keep investing. I'm not gonna stop investing because I owe you, $400 plus interest because you didn't close my account. No, I'm gonna keep investing. So one day they sent me that thing. Well, if you can break it into 10 payments. And I said, yeah, you know what? I'll give you coffee money for 10 months. I'll give you 1 cup of coffee amount for 10 months, and you wipe off my silly, imaginary $400 debt into $50. And that's what I did. And medical is another racket. The same thing. And I hate that because you know what? You know what I hate about medical expense? That they did that to me with the ambulance. Ambulance. Oh my God, with the ambulance over here in Yonkers, Empress Ambulance Service. One day, it was not the anaphylactic shock when that happened, because I didn't get it. I didn't even get into the ambulance. I said, no, I'm okay. After I recovered, after I started breathing again, they still wanted to take me to the hospital. I said, no. Because the minute you sit in the ambulance, it's $1,500. The most expensive cab ride in the world is an ambulance here in Yonkers. $1,500 to sit in the ambulance and take you to the hospital. No, that's okay. My wife would drive me there. We went in her car an hour later, and we went to see a doctor so he could check up on me. Have I would have sat in the ambulance, $1,500. They would have sent me the bill next month because it happened to me before that. And that bill sat there for years. You lost $1,500, well, and you need to pay it, or it might take collective action against you. And let it sit there, bro. I ain't paying it. This is not Dave Ramsey. Dave Ramsey would have been going crazy. Well, you need to pay for that if you need your FICO score. I don't give a fuck about my FICO score. If you got cash, you can buy anything, even a house. A house. Even if you have enough money stocked up in mutual fund and cash and stocks and all that, I don't need a fucking mortgage. Just pay cash. You know, I'll say, yeah, you know, the house is selling for $100,000. You can negotiate. You know, you don't need the broker. You don't even need to go through the broker. You say, you know what? Yeah, I'll give you $75K cash. And, you know, all this junk that you got, I'll keep the junk. Because you have to get rid of the junk that's in the house. There's ways to do all that. There's you know, under the table ways where you could buy a house. And you don't need to, you know what I'm saying? If you save up enough cash, you know, because we almost did it in Florida. We could have bought a house paying cash. Because we didn't want to go through a bank again. Because we don't want another mortgage. That's another racket. You know? Yeah, but it depends on the judgment. You know, that's not, you know, on some things. The two major ones that they go after you is if you owe taxes. If you owe the IRS, you know, some of it you're gonna have to pay. And that one you can settle. There's two major ones. Child support, they go after you hard, or you know, and even child support, you know, but child support and IRS, those are the two big that if you owe money, you better at least send them payments every so often. At least keep them happy with payments. You can't give them the middle finger and that's it. They'll come after you. Those two are the only ones that you have to keep making payments. The life of that debt, you better keep making payments. Or they're gonna come after you hard. They're gonna come after you hard. Okay? Those are the only two major ones. All right, and I don't know about alimony. I don't know, you know. I don't know. I know those two. Every other thing, there's ways that you can. And not financial advice, folks. Just saying. And I know I experienced the child support one. I know. I'm going through. I'm still going through that stuff. And I'm gonna tell you that. There's two major ones. You have to keep making payments, and if whatever you owe back, you still gotta pay it. And that's it. You know, you're not gonna have a choice. There's no, you know, I know with income, with state tax and income, federal income tax, there's companies like Optima, and all these companies that they can settle everything. You can settle if you have enough money to settle. You can. You can always settle. There's a lot of things that you can settle. Okay. Again, not financial advice, folks. I'm throwing a lot at you guys, and it's a nice cream. 2 hours in the books. But, yeah. Those are the two major ones that you cannot fuck around with. I'm going to say it, sorry. If you owe federal income tax, they will come after you hard. And even if they got to garnish your wages, at least you're paying. But if they cannot even do that, you know, and that's another thing. That's why people work in 2 jobs. I know people that work in 3 jobs. My wife, you know, one time she wanted to do 3 jobs. She's working 2 jobs. And she doesn't owe anything like that. I'm just saying that this is why people work 2 jobs. Because you're going to get garnished. You're going to get garnished. But that whole thing about Dave Ramsey with that, well, you know, you got to, you know, other debt like credit card debt. Oh, you got to kill yourself. I ain't killing myself with credit card debt. I got other debt that I got to take care of that takes priority over that debt. So you're going to tell me if you owe federal income tax and your credit card, which one you got to pay first? You better pay the federal one first because they'll come after you hard. The credit card, you know what? You go on the back burner. I'm sorry. I ain't paying you. Sorry, I cannot do both. That's what I'm talking about. That's what I'm trying to tell you. So Dave Ramsey, yeah, you can go to jail for child support, especially depending on what state. Some states are harder on some states. New York, New York is not as strict as some states. I can tell you that from experience. New York, they work with you. But if this happened in another state and you can't pay anything, they'll throw the book at you. It is crazy. It is crazy. So that's state to state thing with the but federal income tax, you owe federal money, you gotta pay. That's it. Federal income tax, yeah. I got a little hiccup. Yeah, my frames went down. 49 frames per second. Yeah, right now, oh boy, now tell me it's buffering. Okay, 60. I saw the frame rate will go down. So I don't subscribe to that Dave Ramsey whole, sacrifice everything to pay. No. You pay off what you can pay off. You know what I mean? Because they try to scare you with that whole thing about, credit card is 20% interest. Hey, I had quite a few credit cards. I don't have them anymore because all my cards are debit. All my cards are debit. But there was a time where I needed a computer and I didn't have money. Back in 1992, I didn't have no money. I didn't have no income. I had a credit card that they sent me. And guess what I did? I maxed that sucker out because I needed a new computer. Without that computer, I would have never learned the skills that I learned that I know now. So, did I blow up that credit card back then? Yeah, I did. Did I eventually pay that one off? Yeah, eventually they gave me a lower rate. That one went up to that's the one that went up to $4,000, and I wound up paying. I think I wanted $700. I broke it into 4 monthly payments of $700. I settled for $700, and that one was at 4,000 something. I remember something like that. And I had a job back then, and I was working, and I said, yeah, I could send them $175 a month for 4 months and wipe out that $4,000 debt. Yeah, I did that. You wait for them to settle with you. A lot of people, they get scared when they see a collection letter. They get scared. They're like, oh my God, I better pay off this credit card. No, you can't pay it. Because they make it impossible for you. Credit card companies don't want you to pay off their card. They want to live off the interest. And I read that somewhere and I heard that somewhere that credit card companies, they don't want you to pay off your card every time. They want to keep milking you for the interest. That's how they make their money. Okay? That's how they make their money. Credit card company make their money from what? Interest fees. And that's how they churn you. Then they don't care about, they're not, when you get a credit card and you say, I'm going to pay it off. They don't care about that. They really don't want you to pay it off. They want you to keep owing them and keep making a payment, keep making a payment. Because that's cash coming in for them. Income. They have millions of people hooked on that. Yeah, if you pay off your credit, if you keep paying your credit card on time and you don't owe them nothing, they would be out of business. If everybody would pay off their credit card, they'd be out of business. They make their money from people that are owing every month they have to pay. They and the interest, and that's where they make their money, from the interest and all that. In a simpler format, that's what I'm. So that whole Dave Ramsey thing, he's lost touch with reality. The man is a multi-millionaire. Who knows? Maybe halfway through a billionaire right now. Who knows? The man, he's lost. He's an asset that is made out of thin air. When he says crypto, bro, you don't know what you're talking about. You make no sense. Because even Kevin O'Leary was another one. He's a poo-poo crypto. Now all he talks about is crypto. Kevin O'Leary, that's another one. Mr. Wonderful from Shark Tank. He's another one that used to poo-poo all that. You know? I'm telling you. Now they all, jumping on the bandwagon and all that. So 2 hours and it's going to be 2 hours and 10 minutes in the books. I can't see how many people watching because I have the, I need to fix it because I want to see how many people watching. So I guess 3 people watching or 2 people watching or whatever. Yeah, Shark Tank. Anyway, I'm gonna end the stream now. Thank you, Tasso. Thank you, my radio DX. I was gonna say Bobby, Chicopee Radio, and anybody else I was watching. If you like this live stream, smash the like button, share the live stream. Also, subscribe to my channel. I keep it real here, and you can ask anything. I try to answer to the best of my ability. Again, I am not a financial advisor, but I can give sound advice. I've been there, done that. I've been investing for over 30 years with my wife, and my wife, 25 years now. And, I make these videos, I keep it real. I'm not going to sugarcoat here. I'm not going to be like, and practical, all my videos are very practical videos. I know I talk slow in some of them. People say, well, you take too long in this video. Well, you know what? Go to another channel where they give a fuck about that. I don't. I'll leave it at that because you know what? At the end of the day, I'm trying to educate you. You guys. You don't need a lot of money to invest. And also, the biggest thing about investing is time. The more you say someday, or I'll do it tomorrow, and you never do it tomorrow, you're already losing money on anything you do in life. So if you're going to do something, just do it already. You want to invest? Start with $100. Take the $100 that you might blow at a dinner. And you and your partner or your whatever friend want to go out to dinner one day now, is $100 easily. Take $100, open up a Robinhood account, and start there. And you'll learn. You learn by doing. Learn by doing. That's how I learn. Okay? So thank you for watching. I'll see you on the next one. Take care.